My people, yesterday we talked about America's $40 trillion debt and asked one very important question. Who exactly is lending America all this money? Well, one of America's biggest lenders has historically been its biggest geopolitical rival, China. At one point, China held more than $1.3 trillion in US government debt. Today, that number has fallen to roughly $633 billion. China has essentially cut its holdings in half. And so, what exactly is China doing? Why is it pulling back? And perhaps even more interesting, where's that money going instead? Because while China has been reducing its holdings of American debt, it has also been quietly accumulating something else: gold. And China isn't alone. Central banks around the world have been buying gold at extraordinary levels, raising a much bigger question about how countries are preparing themselves for a changing global financial system. And for regions like Africa and the Caribbean, this matters, especially when some of our countries are sitting on the very gold the rest of the world increasingly wants. And so today we're following the money, yes. Why is China pulling back from American debt? Why is the world buying more gold right now? And what should countries like Ghana, Burkina Faso, and the rest of Africa and the Caribbean be doing to better position themselves for what may be coming next? Let's break it down. Hello and welcome to The Breakdown, the premier show on YouTube centered in Africa and the Black world in today's global affairs. I'm Sandra Baby Boateng, and I'm here with you every weekday, cutting through the headlines, connecting the dots, and breaking down the biggest stories shaping our world. So if you haven't already, please subscribe to our channel and then tap the notification bell for alerts. And also, because YouTube's algorithm won't always show you every episode, bookmark our channel and stop by every day so you never miss a breakdown. Okay, so let's start with what China is actually doing. According to the latest US Treasury data, China's holdings of American government debt fell to about $633 billion in June. Now, that's down roughly 4% in just 1 month, and more than 13% compared with a year earlier. But to really understand what's happening, you have to zoom out. Because back in 2013, China held roughly $1.3 trillion in US Treasury securities. Now, at the time, China was America's largest foreign creditor. Today, its holdings are less than half of that amount and have fallen to their lowest level since 2008. Now, I want to be careful with the language here, right? This does not mean that China suddenly took $700 billion out of America. This has been happening gradually over more than a decade. And some Chinese dollar assets may also be held through custodians in other countries, which makes the exact picture even more complicated. But the broader trend is unmistakable. China has been reducing its direct exposure to US government debt. And that might sound strange when you consider something else that we discussed yesterday. America needs people to buy this debt. Every time Washington spends more money than it collects, it has to borrow the difference. And one way it does that is by selling Treasury securities to investors around the world. China was once one of the biggest buyers. Which brings us to a question that I think is even more fascinating than why China is selling. Why did China buy more than $1 trillion of American debt in the first place? Because think about how strange that sounds, really. China and America have been competing economically and geopolitically for years. Yet China essentially spent decades lending enormous amounts of money to the United States government. Why? Well, once you understand the answer, you begin to understand one of the most important economic relationships of the past 30 years. Because for a long time, America and China had a deal that worked incredibly well for both of them. For decades, America bought a majority of its goods from China. Phones, computers, clothes, furniture, machinery, you name it. American consumers sent hundreds of billions of dollars to China every year to buy Chinese-made products. And because those transactions were largely conducted in dollars, China began accumulating a huge amount of US dollars. And so now China had another problem. What do you do with all that money, right? You can't simply leave hundreds of billions of dollars just sitting in cash, right? And so China needed somewhere to put it, somewhere that was safe, somewhere that was stable, and somewhere that was liquid. And also somewhere that was big enough to absorb large amounts of money. And there was really one market that stood above the rest, US government debt. And so China took a portion of the dollars that it earned selling goods to America and used those dollars to buy US Treasury securities. And this created an extraordinary cycle. America bought Chinese goods. China accumulated American dollars. China invested some of those dollars back into America by buying US government debt. And that helped Washington borrow more. And America's access to cheap money helped support an economy that could continue buying Chinese goods. In other words, China was effectively helping finance one of its own biggest customers. And for years, this arrangement worked remarkably well for both countries. America got cheap consumer goods and access to huge amounts of financing. China got access to the world's largest consumer market, helping fuel its manufacturing boom, create jobs, accumulate foreign reserves, and transform itself into an economic superpower. That's why calling China America's banker only tells half the story. China wasn't lending America money out of generosity. Both countries were deeply dependent on the same economic machine. But then eventually, something changed. China's economy changed. The relationship between Washington and Beijing changed. And Beijing started asking a very different question. Do we really want this much of our national wealth tied up in American government debt? And my people, increasingly, the answer appears to be no. So now we get to the big question. Why is China reducing its holdings of American debt? And there isn't just one reason. The first is actually pretty straightforward. China is diversifying. Now think about it. At one point, China had more than $1.3 trillion invested in the debt of one country. Now that's a huge amount of exposure, even if that country is the United States. And so over time, Beijing has been spreading more of its reserves across different assets. But there's also a much bigger issue, geopolitics. You see, the relationship between China and the United States today looks very different from the relationship that they had 15 or even 20 years ago. We've had trade wars, tariffs, technology restrictions, sanctions, tensions over Taiwan, competition over semiconductor and AI, and an increasingly intense struggle over who will shape the global economic order. And so from Beijing's perspective, there's an obvious question. How much of China's national wealth should be sitting inside the financial system of its biggest strategic competitor? And then something happened in 2022 that made that question even more serious. After Russia invaded Ukraine, the United States and its allies froze roughly $300 billion of Russian central bank reserves held abroad. Now, whatever you think about whether those sanctions were justified, countries around the world saw something very important. Foreign reserves are not necessarily beyond the reach of geopolitics. If your reserves are held inside another country's financial system, that country may have leverage over them under extraordinary circumstances. And China was watching. That doesn't mean that Beijing immediately started dumping treasuries because of Russia. No. China's treasury holdings had already been declining for years. But the freezing of Russian reserves gave China and many other countries another reason to think seriously about where they store their national wealth. Now, there's another important reason too. Sometimes China sells dollar assets because it needs dollars to help manage the yuan. If China's currency comes under pressure, Beijing can use its foreign reserves as part of its efforts to stabilize financial conditions. And so we shouldn't only look at every treasury sale and say China is attacking the dollar, right? It's more complicated than that. But when you step back, the broader direction becomes very interesting. China is reducing its holdings of US government debt while increasing its exposure to another asset. And this one doesn't belong to America. It doesn't belong to China. It doesn't even belong to any government. Gold. Why are governments suddenly so interested in an asset humans have been hoarding for thousands of years? Because when you understand the answer, you begin to understand what countries may be preparing for. And so let's talk about gold. China's central bank has now been adding gold to its reserves for 20 consecutive months. And in June, just this past June alone, reportedly added around 15 tons of gold. And so why gold? Well, here's a fundamental difference. When China owns a US Treasury bond, right? America owes China money. That bond ultimately depends on the US government honoring its obligation. But when China holds physical gold, nobody owes China anything. Gold isn't America's liability. It isn't Europe's liability. It isn't China's liability. It doesn't depend on another government promising to pay you back. And importantly, if you physically hold that gold inside your own country, another government can simply freeze it through its financial system. And so that makes gold particularly attractive in a world where financial sanctions have increasingly become a tool of geopolitical power. And China isn't alone in thinking this way. Central banks around the world have been buying large amounts of gold in recent years. In fact, central bank gold purchases reached a record 289 tons in the second quarter of 2026 alone. Now, does this mean that countries are abandoning the dollar? No. And I want to emphasize that, right? The dollar remains by far the world's dominant reserve currency, and US Treasury securities remain extraordinarily important to the global financial system. Gold also has limitations. It doesn't pay interest. It can fluctuate dramatically in price. And replacing hundreds of billions or trillions of dollars in Treasury securities with physical gold isn't something countries can simply do overnight. And so this isn't a story about China waking up tomorrow and saying, we're done with the dollar. We're now switching to gold. It's more subtle than that. China appears to be gradually saying, we don't want all of our eggs in one basket. Less dependence on US government debt, more gold, more trade settled in yuan, more financial relationships that don't necessarily have to pass through the dollar. And my people, when you put all of those pieces together, you begin to see something much bigger happening. China isn't simply changing its investment portfolio. It's slowly trying to give itself more options. More options if relations with Washington deteriorate. More options if sanctions become a threat. More options for conducting trade outside of the dollar system. And ultimately, more control over its own financial destiny. For conducting trade outside of the dollar system. And ultimately, more control over its own financial destiny. But this raises the question that always comes up whenever we talk about China selling American debt. Could China actually weaponize this? Could Beijing wake up tomorrow, dump hundreds of billions of dollars in US treasuries and hurt America? Because China still owns roughly $633 billion of America's debt. That sounds like a huge financial weapon. Yeah. But the truth is, using it would be much more complicated than it sounds. Theoretically, right? Theoretically, Beijing could start selling massive amounts of those bonds, yes. If enough treasuries suddenly flooded the market, their prices could fall. And when treasury prices fall, yields, or the interest rates that America has to offer investors, can rise. So that could make borrowing more expensive for the U.S. government at exactly the moment that Washington is already carrying $40 trillion in debt, you see. And so it sounds like a pretty powerful weapon, except that there's a problem. China could hurt itself in the process. If China dumped treasuries and pushed their prices down, it could reduce the value of the hundreds of billions of dollars in treasuries that China still owns. Second, China would have to answer a surprisingly difficult question. Where do you put all of that money instead? You see, because remember why China bought treasuries in the first place. The US Treasury market is huge, it's liquid, and it allows countries to move hundreds of billions of dollars relatively easily. There simply aren't many alternatives capable of absorbing that much money while offering the same combination of scale and liquidity. And so could China buy more gold? Sure. But imagine trying to move hundreds of billions of dollars into gold without dramatically moving the gold market itself, right? Could it move into euros, Japanese bonds, other currencies? Yes. But each comes with its own risks and limitations. And then there's another problem. A massive sell-off of dollars could potentially push China's own currency higher against the dollar. And that could make Chinese exports more expensive for American consumers, something that Beijing may not necessarily want when exports remain important to Chinese economy. So China does have leverage, yes. But those treasury holdings aren't some giant red button that Beijing can press and suddenly destroy the American economy. No. The two economies are still too interconnected for that. And there's something else that we have to remember. China isn't America's only foreign lender. Japan now holds more US government debt than China does. The United Kingdom holds hundreds of billions as well. And altogether, foreign investors still own roughly $9 trillion in US Treasury securities. So even as China has pulled back, other investors have continued financing Washington. Which brings us to what I think is actually the bigger story. The danger isn't necessarily that China wakes up tomorrow and dumps everything. The more important question is, what happens if China is part of a much broader but slower shift? What happens if governments and investors around the world don't stop buying American debt, but increasingly say, well, we'll buy it, but you're gonna have to pay us more? Because America doesn't just need buyers today. With $40 trillion in debt, huge annual deficits, and trillions of dollars of existing debt constantly being refinanced, America is going to need buyers for years to come. The unforeseeable future, as they say. And that means the real power may not be in refusing to lend America money altogether. It may simply be in demanding a higher price to do it. And if that starts happening on a larger scale, that's when China's quiet retreat from US debt becomes much more important than China alone. And so finally, let's bring it home, right? What does all of this mean for the rest of us? Because trust me, this story isn't just about China. If central banks around the world are buying more gold, if countries are thinking more carefully about how much of their reserves they want sitting in dollars, and if gold is becoming increasingly important as a strategic financial asset, then countries that actually produce gold should be paying very close attention. And nowhere is that more relevant than Africa. So take a country like Ghana, right? Ghana is currently the largest gold producer in Africa. Think about the irony here. Countries like Ghana are taking the dollars that they've accumulated and using some of that money to buy more gold. Meanwhile, African countries are sitting on some of the very gold the world increasingly wants. And so perhaps the question for Africa shouldn't simply be, how much gold can we export? It should also be, how much of this strategic asset should we actually keep at home? And Ghana is already beginning to wrestle with that question. The country has been building up its domestic gold purchasing programs, and the Bank of Ghana has sought to increase the amount of gold that large mining companies sell to the central bank to 30% of their annual production. The goal is to build Ghana's own reserves. And that becomes very interesting in the context of what China is doing, right? Because if China believes that having more gold gives it greater protection and more financial options, why shouldn't Africa's biggest gold producer be thinking strategically about the same thing? Now, does that mean that Ghana should simply hoard and sit on all of its gold? No. Ghana needs foreign exchange. It needs dollars to pay for imports, service foreign debt, and conduct international trade. And gold prices can rise and fall. So there has to be a balance. But I think the bigger opportunity is for Ghana and other African gold producers to stop thinking about gold simply as something that we dig out of the ground and sell. Gold can also be a strategic financial asset. It can strengthen reserves. It can provide protection during currency crisis. It can diversify a country's savings away from dependence on any single foreign currency. And potentially over time, it can give governments more options for navigating global financial shocks. Now, it's a very different way of thinking about natural resources, right? And it goes beyond Ghana. South Africa, Mali, Burkina Faso, Tanzania, Sudan, Zimbabwe, countries across the continent possess large amounts of mineral wealth. And if the global financial system is entering a period where strategic minerals and hard assets become increasingly valuable, then Africa has to ask, are we simply going to supply everybody else's strategy? Or are we going to build one of our own? And there's a lesson here for the Caribbean as well, yeah. Most Caribbean countries aren't major gold producers, although Guyana and Suriname are important exceptions. But the larger issue applies across the region. How much financial dependence should small economies have on one currency and one financial system? Caribbean economies are deeply connected to the dollar through trade, tourism, debt, remittances, and reserves. And so greater diversification globally matters. It matters to them too, yeah. And I'm not suggesting that countries should suddenly dump their dollars, no. That could create far more problems than it solves. The dollar remains important. But what China is doing gives developing countries something worth thinking about. Financial resilience is about having options, different reserve assets, stronger domestic currencies, deeper local capital markets, more regional trade, yes, more trade settled without constantly converting through a third country's currency. And critically for Africa, greater control over the resources that the world increasingly considers strategic. Because perhaps the biggest lesson from China isn't that everyone should buy gold, is that China is deliberately thinking about what the world could look like 10, 20, or 30 years from now, and positioning itself accordingly. Africa and the Caribbean need to be doing exactly the same thing, but especially Africa. Because if the world is moving toward a future where gold becomes more strategically important, the continent producing so much of that gold should not simply be watching from the sidelines, right? It should be asking, how do we turn what is underneath our soil into greater financial power above it? And that's ultimately what I think this story is about. China isn't abandoning America tomorrow. The dollar isn't disappearing tomorrow. But China is giving itself options. And so the lesson for the rest of us is very simple. We should be building options too. That's it. And so, my people, I turn it over to you. What do you think about China's strategic move? And what it says about where the global economy is heading? And as countries like China accumulate more gold, should African gold-producing countries be selling as much of theirs as they do? Or should they be keeping more of it at home and building their own reserves as well? Let me know what you think in the comments and let's have the conversation.